My friends, what is going on? Hope you guys are enjoying your weekend. I wanted to jump in here and get this video out of the way before all the awesome football games get going today. First things first, I wanted to say thank you to everybody that if you follow me on Twitter, noticed today I went over 10,000 followers. Once again, me posting my opinions and thoughts was never about followers. It was, never about anything other than trying to help. And so if I'm helping you, great. If you're following me because you want to troll me, great. I really don't care. Once again, I'm going to put my information out, whether it's 10 people, 10,000. Anyway, I just wanted to start the video out by saying thank you. I truly appreciate you guys. So in today's video, what I want to do is I want to cover the good, the bad, and the ugly of potentially what might be going on. And so let's start with the ugly. I want to end things on a positive note. So let's talk about some ugly things that could happen. So first things first, just kind of looking at the chart in general. Okay. Obviously we've had our two big rips, and now we dropped off the face of the world. And we are starting to find, so once again, as you can see, this push down real through the 20s was real easy, which I'll explain why in just a second. And then now we're starting to get to a point down here, in these middle teens where it's becoming harder and harder and harder to push it down. Every single time we get pushed down, we're starting to get some big turnaround days the very next day. So it's not that we can't go lower. In fact, I'm about to make a case for it. Wait for it. $10. Oh, that'd be a tragedy. But I think it's possible. I have always told you guys through Twitter, this channel, any other way possible, I'm always going to give you information the way I like to receive information. And I like to receive information as real, no sunshine and rainbows. Just give me the facts and the data. And so, that's why I always said too, I'm never going to base anything that I do on, 100% speculation or anything like that. And if I do, I'll tell you guys, I will tell you, hey, this is purely speculative, or this is just my opinion on the situation. So like I said, I won't try to give you any information that I can't prove, through an article or the option chain, or I can't prove it on the chart. And so everything I try to say is always going to be backed up by what I feel like I can prove. So having said that, right here, this is, what's called the visible range, the VPVR. So what it does is, we've talked about it a lot. It shows you what are the most heavily traded ranges for this stock. And what it does is it takes your very first candle on your page and your very last candle on your page, and it shows you what's going on in that time frame. So it's from the first candle to your last candle, how has it been traded in that range. And so what I wanted to look at is with AMC, let's look at it from a standpoint of when did retail really get involved in this movement. Now, once again, what I'm about to cover is going to be my perspective of the stock. So for me, AMC, even the January run, was not all about diamond-handed apes or anything along those lines. For me, it was about, it's a great squeeze play, which it was, because it is a stock that since the start of COVID, let's just go and take a look at the start of COVID. So from the start of COVID, right around that February and March of 2020, it had been a stock that had just been heavily shorted and beaten down. And then right around that beginning of 2021 is when, once again for me, you really started seeing the first signs of like, hey, we're going to start trying to get back to life to normal. We're going to start having fans again at football games. It was started, the COVID fatigue was starting to sit in, and people were kind of like, okay, we have got to, get past this. So I made a ton of money on a basically hotel chains reopening. And then I also made a ton of money originally with the idea of going, hey, people are about to start going back to the movie theaters again. And so, like I said in a previous video, before I was a, diamond handed, you know, honestly, sometimes I don't like calling myself an ape because some of you guys can be straight culty sometimes. And I don't like that aspect of it. I'm not going to sugarcoat it. But, if you had to ask me if am I an ape or am I not an ape, at the end of the day, I'm going to say yes, I am, because at this point, like I've already said, I've lost enough money on AMC that at this point it's either a lot of money or no money for me. So, but like I don't want to jump into that. Anyway, so before I'm holding this thing to zero. I bought in. I'd have to go back and look, but it was right around in here, towards the all-time low. And then when it squeezed, and gamma ramped really hard and all that craziness happened, I sold. It was in like the $16 range, and so it was a great trade for me. And then, like everybody else, we saw the buy button get taken away, and just like everybody else, that infuriated me. I have never seen a more just, they're going to do it in broad daylight, in our face, manipulation and rig the system more for, the top 1% on Wall Street. It blew my mind. I was just talking with my wife about it the other day. What hurts so bad about this situation to me originally was just like, I truly always kind of believe we had a fair and a free market, and that buy button being taken away, that was the exact opposite definition of a fair or a free market. And so it ticked me off, but at the same time, at that point in time, I didn't really know how it was going to play out. I had a Twitter account at that point in time, but like I said, I wasn't following along, heavily with the AMC movement until later. And now I want to be, and I feel like I'm a big part of it. And thank you guys for following along on that journey. So, sorry, this video is going to be long. I can already tell. I apologize in advance. So what I wanted to do is let's take a look at where did retail get involved in this situation. And so once again, I'm going to kind of move my screen over so that way we have the all-time low that led up, to the January ramp to where we are right now. So what we have here is when you look at AMC and you're looking at the visible range, right here, where this red line shoots through, is what's called the point of control, okay? And the point of control is in this range. So we're saying this range is going to be from January 5th to where we are right now. In this range, the most heavily traded level for AMC is going to be right at that $10 range, okay? And where we are right now, so right now we closed on Friday just above 15, which honestly I was shocked at that because we'll get into a second, but there was a lot of options in the money at $15 for Friday. And so, sorry, all over the place. We'll get to that in just a second. But where we actually touched, so we touched pretty much the, taking a glance at the third biggest floor right here at that $13 range, okay? And the last time we had kind of gotten down and sort of touched this floor, was back here a few days earlier on that January 24th. And we had big wicks. So these two big red days in the middle are going to be when the overall market is just getting hammered. And once again, like people are always like, oh, AMC got negative beta. And it does, but that you're going to see that kick in after a while. So it is not just a market go down, AMC go up. That's not how negative beta is going to work. So this point of control right here is going to be right at this $10 range. That is the most since, in my opinion, retail heavily got involved in AMC and the movement started. The buy button was taken away. Twitter and YouTube and everything else is blown up. $10 is the point of control. Okay, and here's why. Because after the January run up, the buy button was taken away. Everybody got super pissed off. In my opinion, this could be one of the biggest backfires that happened to them. So they tried to save their skin right here by removing the buy button, protecting us from ourselves. Guys, there's too much volatility in this stock. We don't want you to get hurt, so we're doing this to help you and protect you. And in reality, 4 million plus investors in AMC and however many are in GameStop, it turned into people just getting pissed off and not feeling protected. So that's when it turned into, now you done messed up. Now we are buying and we are holding this thing, and we are going to squeeze you for every penny that you could possibly ever own. So that's when everybody was just like, no, screw this. And a lot of buying, took place in this range. So that's why I think you've got such a heavy point of control right here at this $10. And you can see it traded either just below it or just above it, and kind of, figure eighted or ribboned around it until the June ramp up. So where we're sitting right now, where we touched, which here's what I like. Here's the reason we may not go lower, is once we did get to below this range right here, okay, on this third biggest bar right here. Let me kind of help you guys out there. So on that bar right there, rather than reaching it and then breaking through to the next floor level, which would have been right in here, instead we got rejected and pushed up. Okay, so that's good. All right, so once again right here, this third biggest level, since where retail got involved, we came down and we hit it, and we got a real long wick at the bottom. The overall market started to recover. So once again, all good things. Now the case is obviously, if the overall market starts to get pushed down this next week, we do kind of have a liquidity gap, right in here, which could push us all the way back down to this $10 range. Another reason we could come down here, so let's go to the 15-minute chart. Let me go ahead and take that off so it's not too distracting. Let's see here. Right here. There it is. Sorry guys, it took me a second to find it. But right here, May 13th, we have got a gap. Okay? That gap is from $10.32 up to $10.64. And as you can see, it never came back to fill that. Okay? So right here, we got a gap. What have we said about not just AMC, but all stocks? All stocks like to come and fill these gaps. Okay? So I'm not saying it's likely. Once again, I always try to do this channel on what do I think is the most likely scenario. And I don't think this is the most likely scenario, but it is a scenario, is to come down here and fill this gap. If you believe in trading against the composite man, which I do, then I don't ever believe that sometimes gaps aren't left on purpose from a standpoint of, based off of news or what the composite man might need at a certain point in time. They always have a little gap that they can go back and fill. And then at the end of the day, when you're looking at it, you go, oh, well, it's because there was a gap there. And so there's a reason that gaps are left on stocks. Once again, that is speculative, and it is my personal opinion, is that sometimes the news comes out to justify the move, And sometimes you go, oh my gosh, why is this stock doing this? And then you realize, oh, it's because there was a gap left back here. So there is a gap right back here. Now, once again, do I think that's most likely? No, I don't think that's most likely. But when you look at the point of control and you look at the overall market and what it's doing and everybody freaking out about, interest rates and everything like that, that could definitely be a possibility. Okay, that's honestly, it's my second most likely scenario. But I think the most likely scenario is that the bottom is in and we start reversing. AMC has definitely kind of been looking for a good solid bottom in my opinion. And like I said, there's a lot of reasons to believe that a reversal is going to happen, especially if we get an overall relief rally in the market over the next 4 weeks heading into March before the Fed starts actually hiking interest rates or anything along those lines. So let's take a look at some wedges here. So there's lots of different ways to draw wedges. All right, here's one way that I'm looking at right now. Okay, so it's this one's basically going to be from our original, just kind of, once we started dumping off right here. Like I said in a previous video, guys, I truly believe if the market overall wasn't just tanking and selling off really bad, I think right here on this December 14th, I think that was going to be the reversal. But I think AMC just couldn't beat the overall market, and that's why we continued to tumble. So here's kind of our most current wedge that I'm looking at. There's also going to be this one right here. Now, I tweeted out a few days ago that this was actually one of my more favorite ones, just because it used the all-time high for reference, and once again, you can see lots of touch points here. Now, this one did break down, and once again, guys, when you're drawing the lines, it to an extent, it can all be ranges. So if we go back and look at this one, and it essentially sort of made, this type of move, before it broke out. This, in my opinion, would have still been a very valid wedge. So it doesn't have to follow the lines exactly. Think of those as kind of more like ranges. All right. Another one, and I think I actually saw this one. I think Dave was the one that I saw talking about this one. And it's going to be, from the June 2nd, using all of this right here. So you could use this one as your support line, this one as your top line, and that could get you bouncing around, down in here. And once again, where does that one take us? This one take us to about that $10 range that I was just talking about. Now, once again, don't get worried about the dates down here or anything along those lines. I don't think it would take that long. It could, but I don't think that it will. But when looking at wedges, there's kind of three rules. There's three things that we really want to see on a wedge. Sorry if this is blinding. So, rule number one, on the price action, we temporarily want to see it trade in a downtrend. I think we can all agree AMC has definitely been trading in a downtrend. There are two trend lines. We got an upper and a lower that are converging. So go back. So AMC's price action, downtrend, upper and lower trend lines. Once again, here's three kind of examples I'm really watching right now. Obviously, every single one of those, if you extend those out, are all going to be converging trend lines. And then last but not least, we want a decrease in volume as the channel progresses. And even if you take out the June 2nd actual day, even if you go down here where it's okay, volatility didn't cool off, but even if you look at it from right here, let's say we take it from like June 7th, there has still been a decrease in volume the entire time. Once again, overall, are there going to be some days that are higher, some days a little bit lower? Yes, but overall, we have a decrease in volume as we are in a descending wedge. So we are following the three big rules for a descending wedge, and so all of that is indicative of a reversal coming. All right. When exactly, nobody knows for sure, of course. We'd all be real rich if we knew in certainty what the market was going to do. But we are in a reversal trend. Now, does that mean Monday we have to see price action, shooting through the roof? No, that's not what it means. But it does mean that we are in a bullish reversal trend of a descending wedge. Okay? Now, if you get rid of these wedges, now let's look at fibs. So once again, I think the most rock solid fib that we've been tracking is going to be from the buy button collapse. And once again, we just talked about that's when retail really started saying, screw you and we're mad. As you can see, if you look at this fib, every key level has had major trading done around its levels, okay? Whether they've provided support, resistance. So we just came down and we touched basically the 0.65 and the 0.6H, which we've always talked about. That's what creates the golden pocket. We've also talked about the 382 and the 618s are your most likely spots for reversals to begin. And so we went right down into the golden pocket and had a nice push up and close above. The biggest thing for me that I would have wanted to have seen differently at this point is if we would have come down here and we would have seen, $150, $200 million volume day, I would have been pretty much completely positive that a reversal was going to be starting. Even if the candle looked the same, if there was just more volume here, I would have been pretty positive that a reversal would have been starting then. The overall volume was not great. It was a $53 million volume day, which has been higher than what we've been seeing lately. But like I said, if it would have been a big volume day, I would have been even more confident that a reversal was starting. So, like I said, overall, this is going to be the big Fibonacci area that we're going to be watching and want to see this hold. If not, then if this doesn't hold, then the next big key level would be the 786 at the $9.23, which once again would get the gap fill and hit the VPVR range that I talked about earlier. So once again, all that makes a case where it is definitely possible to go down to that $10 range. Once again, not my most likely scenario, but a possible scenario. So when you take in everything that's going on, if we go to the overall market, if we go look at the SPY, this candle right here was a big old candle. The green volume, okay, your bullish volume is going to be what's taking over. I mean, it is meeting hard resistance right down here, in this 425 area and pushing up. So if we see a big relief rally, I think we'll probably see a push up towards right here. I don't know what that is. Sorry, let me get rid of that. So I think the most likely scenario right now with SPY is to start seeing a push back up towards the top. So once again, guys, let me zoom out here so you can see what this is doing. So this is a rising wedge on decreasing volume. Now the volume's starting to pick up right here, but of course the volume's not starting to pick up until after we actually broke out of that rising wedge. But you can see up until the breakdown happening, it was trading on much lower volume. But we were just, from the COVID collapse, we were just rocketing back up virtually at a parabolic state. So now that we've broken out, SPY is trying to find its bottom as well. I think, the overall market is trying to find it. This is an awesome candle right here, good solid volume. So I think the most likely scenario right here, with SPY is going to be a push back up to the top of this wedge, and it'll either get back in it or we'll get rejected, come back here, consolidate, get back up. Now, at some point, I do believe we're going to see a big old, 20-30% correction, okay? But when that happens, once again, that's anybody's guess at this point in time. But if we get this overall push back up towards the top of this wedge and get back up into the 470 area before we get rejected, I think AMC and the rest of the market are going to travel right alongside with it. And so that's why we could see a pushback towards 20. I tweeted out on Friday, I think a pushback towards 20 is going to be what we see in the coming week or two. And I still believe that. So if you go, and sorry again if this is blinding, but if you go and you look at the option chain, not too much going on in it this upcoming week. You've got, let's see here, once we get up, if we do push anywhere up towards the 20, we've got a decent amount at the 20, we got a decent amount at 18. So there definitely is a decent amount of open interest, not a ton, definitely not what we've seen in the past. If you are a options player, guys, once again, nothing I say is ever financial advice, but the best thing to do is buy in the money or close to in the money options. If you want to see gamma ramps and gamma squeezes and everything like that, once again, honestly, I don't do options. I buy shares, and that is what I do, okay? So full disclosure there, I buy shares. I don't do options. If you are an option player and you want to see a gamma ramp at AMC, the best thing to do is buying them in the money or close to in the money, and putting pressure on the market makers to hedge for those shares becoming in the money. That's the best thing that you can do. YOLOing crazy options, the 145s, 3 months out or anything like that is not putting pressure on them. So if you're an options player, that is my personal opinion. But once again, full disclosure, I don't do options. I buy shares, and that's it. So that's pretty much everything for today, guys. Once again, lots of reasons to be excited in the overall market. And once again, AMC is trading with the overall market, whether you like it or not. So when the overall market is dumping, so is AMC. And when the overall market is recovering, so is AMC. Once again, that's my opinion on it. So if you look, as soon as we can start recovering to some of these EMAs, that is going to be very good for us. If we start recovering towards that $20 range, right now the 20-day EMA, which that's going to be the first level for us to get, is at $19.94. So if we can start recovering some of those, and even if you go in here and we start looking at like the 15-minute time frame, so you can see we've already done that on some of the lower time frames. So like for Monday, this 1550 area, that's going to be our first big test of the 100. And then, up here at the 200, at the 1650, we'll probably get rejected up here at the 100, come back and test, the 50 day or even the 20 day before moving back up. And so I think these are great indicators to be watching as well the entire time. So overall, as of right now, especially, I've been not tracking the news by any means because I freaking hate the news, but I haven't seen anything crazy about, World War III starting just yet. That's pretty much what I tweeted out on Friday. It was like, hey, I think we'll see an overall, big market boom. If you look at the way the market closed on Friday, it was looking pretty squeezy, if you know what I'm saying, because there was a lot of people, I think, closing out some short positions and everything along those. Not these shorts. I'm not talking about that. Chill, all right? But I think there was a lot of people, that last few minutes of the market when Biden was talking, I think everybody was kind of waiting and anticipating, like, is the U.S. getting involved in this or anything along those lines? And because it wasn't very definitive, people were like, okay, World War III is not starting yet. Let's get out of these, some of these short, positions or anything along those lines. So overall, I'm excited to see a big relief rally. I think over the next anywhere between 2 to 4 weeks, we'll definitely see some pullbacks if we start, seeing the interest rates hike up or anything along those lines. But overall, I'm very positive about movement on AMC. One last thing. I don't like to talk about this too much because it's really not my wheelhouse. But the FTDs and the hold on one second. Yeah, all the December FTDs. They have a settlement date of 35 days. Which I was talking with somebody. They have a really good theory. I'm not going to share that because it's their theory and they asked me not to. So I'm going to honor that. But the FTDs would have hit the market on the 28th, which would have been Friday. But due to the Martin Luther King holiday, that means they hit on Monday. So between the January leaps, the December FTDs, those are all going to be coming in this week. So like I said, there's lots of reasons for hope. And there's lots of... To me right now, there's way more cases for upside movement than downside movement. I already laid out a case of why I think $10 is my second, strongest possibility. But I think it's up from here. Okay. Yeah, getting here in this 15-minute, once we did hit this, like I said, the volume was good. It was just, I really wish we would have seen, a little bit stronger buyers. Would have been nice to see for a reversal is starting. But overall, my friends, like I said, I think there's a lot to be happy and positive about. Oh, I'm sorry. Once again, I don't ever plan out these videos. So our big line of resistance, in my opinion, this is going to be the most important one for us to break. It was from the all-time high. We had the fake out, breakout in September, got pushed back down, acted as resistance in October. Then we had, where everybody was getting excited, including me, we had this big push up in November. We came down, and this is where I really thought, okay, we're actually going to go, is when we came down and retested it. And then we saw a nice push up again, but that nice little push up that we got, the volume wasn't there for what we wanted to see. And then we came down, we tested it again, we pushed back up, and then we just got dumped. We were rejected off of it twice in December. And so to me, this trend line right here towards the upside is going to be the most key one to break, to really say that, like, hey, once we break this one, then for me, we can start talking about when we might see, SOSs and all-time highs again and everything along those lines. But until that happens and we break it with solid volume, I really don't even want to discuss it. So right now, like heading into Monday, that range is in the 27, 28. But like I said, every single day that gets lower. Also, the support line that I drew from a few days ago, from where the buy button collapse happened and we consolidated right in here, just having an extended line, which once again you can see it provided resistance here, and then once we shot past it, then it provided support. And once again, this is all when retail started getting involved. So we had 1, 2, 3 touches where we actually and we closed above it again. So to me, this support line is becoming more and more valid every single day. Doesn't mean that it can't break it. It just means that every single time we have a touch and it reacts to that touch, that becomes a more valid support line as far as I'm concerned. So, that all starts converging by May. So a move of, here and then consolidate and then breaking out like that. Once again, that type of movement wouldn't surprise me at all either. So that's another thing I'll be keeping my eye on. But like I said, it is just I laid out a case for 10, but I also think there's a lot of reasons to be positive about what we might see in the coming weeks. Obviously, I'll keep my eye on it. Follow me on Twitter, Colin_Gulabman. That's going to be where I tweet out, more intraday thoughts and everything along those lines. And I'll try to keep the videos rolling out. I apologize. I know this is a insanely long video, but it was just a lot of things that I really wanted to try to cover today. Which means I've got more to talk about. I just realized. One last thing, and then I'll let you go, I promise. I teased Dave the other day because I was like, Dude, I went full Dave on my video because I said, okay, that's all I got today, and then proceeded to talk for 20 more minutes, and here I am doing it again. So another reason that we have really solid support right now is because if you look from this gap down that originally happened back in August of 2017, AMC virtually traded around it, once again, kind of that figure eighting or ribboning, however you want to look at it, for almost 2 years. Okay. And then now that was our top line resistance right here. Okay. So it provided huge resistance in that March and then pre-May before the big run up in June. And now we've come down and we've touched it right here again. And so this is another big reason that I think that this could be, our solid support line right here. When you look at the VPVR and you take it in, as a whole. So once again, if you're the composite man, what you're doing is you're out there looking for liquidity. You're out there looking for buyers and sellers because that's where you make money. So let me just leave you with this. What makes more sense to you? If you were the composite man and you were looking for liquidity, what makes more sense? For you to continue to push down here into these areas, okay, where it's all been heavily traded, where there's lots of support and resistance, or does it make more sense for you to move back up this way in these unheavily traded areas where there's less support and resistance? Is it going to be easier to find liquidity down here? Or is it going to be easier to find liquidity and FOMO up here? If you were the composite man, what do you think? What do you think your answer would be? Is it easier for me to find it up top where it hasn't been heavily traded? Or is it easier for me to find it down here where it has been? I know my answer, but you ask yourself, what's your answer? Have a good one, my friends. I'll see you next week.